Hello everyone, and thanks for tuning in for another Market Outlook by XNES. My name is Andreas Aristokleous, trading specialist here at XNES, and in today's video we are going to be checking on a possible trading idea for the next few days, the narratives behind it, and which economic data could potentially affect this trade. But before we proceed, let's check on the performance of last week's idea. Last week's idea was for a buy on Bitcoin with a target around the 35,000 area. After the aggressive rally of last week, the price entered the range with no significant moves to either side. For the time being, the idea might still be valid if we see any significant push to the upside. Now, for this week, we are looking at gold for a potential long trade with a target around the 2010 area. The price is still in a bullish momentum despite the recent minor correction to the downside. This is confirmed also from the fact that the 20-day moving average is trading above the slower 50-day moving average, validating the bullish trend. On the other hand, the stochastic oscillator is in the extreme overbought levels for the last 2 consecutive weeks in the expansion of the Bollinger Band, which indicates fueled up volatility. It might take some time for a major correction to occur. Gold prices are trading around the key 2000 level. Investors are cautious ahead of the upcoming US Federal Reserve policy meeting and the US job report on Friday that are broadly expected to create volatility to the majority of the instruments traded against the dollar. The Fed is expected to keep interest rates unchanged, but market participants will be focused on Chair Jerome Powell's commentary in the subsequent press release in an effort to get hints about future monetary policy. In terms of economic data for this week that traders will be paying attention to are the US manufacturing PMI and the Fed publication on Wednesday, US job report on Friday, which includes the NFP and the unemployment rate, as well as the US services PMI also on Friday. So in summary, the trading idea for this week is a long position on gold with a potential target around the 2010 price area. The main narrative is the probabilities of the Fed keeping the interest rates stable, as well as major publications in the economic calendar that have major influence on the price of the dollar. The economic data that could affect this trade are mainly the US manufacturing PMI, the Fed meeting, the US job report, and the services PMI. Remember, this is not a signal, it's just an idea for a trade. It's not a guarantee of success. Always do your own research and remember to manage risks.